Become a profitable trader. Hi, I'm CA Rudramurthy, author, trader and trainer, welcomes you to Easy Money Show. Today if you see Nifty, it is indicating for you a gap down open based on Singapore Nifty. Yes, SGX Nifty is showing this weakness again because of weakness found in US market. Might be the worries which are there in terms of Fed further continuing the interest rate hike for short term and expectation of market that sooner we will have rate cuts to come from central bank is still not happening. But keep aside the fundamental, look at the technicals. Nifty yesterday made that big attempt towards again 18,400 to 18,450 zone, which is acting as a stiff resistance zone. Yes, last two attempts have been made to this level of 18,400 to 18,450. From there, market is again finding that supply or resistance and coming down. Even in yesterday's video, I clearly told my market profile and order flow charts are telling, yes, 18,100 is a support zone. You should not hold your short positions closer to 18,100. In fact, you have to buy that 18,100 dip, and similarly when you go to the upper band of this range, which is at around 18,400 to 18,450, you have to keep booking your profit. The rule is very simple. Whenever you see a range bound market, buy the lower side of the range and sell the upper side of the range. Yes, the current range, practically I am giving you this learning also into implementation. The current Nifty range is at 18,050 to 18,100 on the lower side, and on the upper side it is 18,400 to 18,450. So any move coming to the lower part of the range, that is 18,050 to 18,100 zone, you will be a buyer, and any move coming to 18,400 to 18,450, you will be a seller. So when you buy 18,050 to 18,100 range, keep a stop loss below this range, because if market breaks this range and comes down, then no meaning having the buy position and buying the lower part of the range and selling the upper part of the range, because the range has now got broken if it comes below 18,050 to 18,100 zone. So that is where stop loss plays a crucial role, risk management plays a crucial role. And on the upside, 18,400 to 18,450 is the zone to sell. However, if you are shorting 18,400 to 18,450 zone, have a stop loss above this range, that is above 18,450, because if market goes above this upper band or the upper range, then what happens? We will see more short covering, much more fresh buying, and the move is now beyond the range of 18,100 to that 18,400 zone. So now what is next? We are still within the range. On the lower side the range is holding up, on the upper side the range is holding up. So what to do? So you have to allow for this time wise consolidation and wait for the range to break out on the upside or break down on the downside, so that you get a momentum move and a larger move. Yes, market is trading within the range, and we call this as bracket, or we call this as a simple range which has just got formed between that 18,050 to 18,100 on future level, and on the upper side it is 18,400 to 18,450. Look at Bank Nifty. Again in Bank Nifty, stiff resistance is seen at 44,100 to 44,200 zone, and on the lower side, yes, 43,500 to 43,600 is acting as a crucial support. So here also you have this range of 43,500 on the lower side and around 44,200 on the upper side. Again in this range, buy the lower part, sell the higher part. Keep stop loss below the lower part when you buy, and keep stop loss above the higher part when you sell. I want to give you the biggest learning if you want to become a profitable trader. Market is always a game of probability. So you have to be at that side where the probability of winning is very high. But along with probability, another key for successful trading is risk reward. So you have to trade only that probabilistic trade which has higher probability of winning. Along with it, ensure risk reward ratio is at least 1:1, or if we have better risk reward ratio, sometimes what happens, for 1 rupee risk you are looking at 3 rupee kind of a return. That will ensure even if your probability of winning is less than 50%, eventually you will make money even with lower probability of winning, because your risk reward is great. Yes, it is all to do with probability and risk reward. So you can't 100% using any technique tell that yes, market will either break out or break down. You have to allow market to do it and just follow the market. So never be a person who will predict the market, rather know what market is doing, have these ranges very clear, do the right technical analysis and the right way, and once market gives a move beyond that point, then just follow the market. So good profitable trader always follows the market, and a losing trader always hopes that market will follow him or her. I'm sure these videos are adding a lot of value to you people, but then if you want to encourage me to continue doing this work and give you a lot of value and free program and free inputs, free learning like this, I just want you to ensure minimum 5 people you will forward this video and join hands with me to spread the right financial literacy. Thank you so much for watching. Take care. Bye bye.